Blaster, where we blow apart the stock market and put it back together so that it makes sense for you. I'm Forbes Markets Editor John Dobis, joined by Jay Pestrichelli, who is from the author of Buy and Hedge.
Buy and Hedge, yeah.
Your company, Zega Financial.
Yeah, John.
A few things we're going to talk about today with options with Jay. But first, what really colored the market on Friday was a report 10 p.m. on Thursday night showing that the economy in China is slowing down to an 8.1% annualized growth rate for GDP from 8.9% for the last 3 months of 2011. Look at the Chinese growth rate here, slowed down into the Great Recession to 6.2. Massive stimulus, just editing a column for the magazine by Gary Schilling on this great column, jacked up the growth rate by double to early 2010, and it's been going down ever since. House prices are way too high. They're trying to talk the prices of houses down. They've been down for 5 straight quarters, so they're doing a good job of it. Slowing down big time, right?
Oh yeah, no doubt. And the market's certainly digested that today.
And it really colored the overall perception in the market. Chinese Premier Wen Jiabo says, hey, it's okay if we grow at 7.5% to 8%. Of course, they were above 10% for most of the past decade. So, but the FXI, the ETF that tracks China, the biggest companies there, was actually up a little bit because people sniff a new stimulus. Last time around, they spent in China the equivalent of 12% of GDP on stimulus. We only spent about 6% here in the U.S. So FXI might be going higher because the Chinese authorities will be back stimulating the market. Big news out of JP Morgan, great blowout earnings, but the stock fell. So I could have handed you, Jay, last night the report saying here's what JP's going to report tomorrow.
Oh yeah, I would have been long the stock.
Wow,
yeah,
great,
absolutely.
Man.
I would have been bullish.
And it was down. But Morgan, he knocked it out. He knocked it out of the park. Higher revenue. EPS was down, but it beat estimates. And JP Morgan sold off a bit on the news. A bit, 2.873% on the news. But a nice run from 30 bucks. Looking at the sectors, you've got the techs and the financials right here leading year to date. S&P 500 right here. China down up 7% year to date. S&P still up 11, emerging markets 12.9, just to give you some perspective. So we're going to talk about some technology and some financials because it is the season again. No, not that season, Christmas, but earnings season. And Citibank coming out on April 16th. That's Monday.
Monday, yep.
You've got some options trades here. You're a bull on Citi, not a bad reason. Getting some support here at what, the 50-day average? Some big selling, but you know, a few days of selling here, but
yeah.
The trend's higher in Citi. So what do you like to do with it?
Well, you know, we took a look at the options market to say, you know, what is what we call the smart money? Doesn't mean the right money, the smart money, right? The people that are more effective in using their cash. So what are they doing? And it looks like there's a lot of buying of calls. Right. And so when we see that, we like to get bullish. That means people are trying to have a positive outlook. And so the trade that we come up with here is a May spread, right? It's a debit call spread, which means you're buying an option and selling another option above it to help fund it. Right. And we like the 32 is the bottom level and the 35 is the top level. And what that does is between those marks, between those strike prices, it feels like you own the stock, but you put out a significantly lower amount of money, right?
So the net result here, Citi, let's say they report and they go above 35 bucks. You're going to be making some money there?
Yeah, absolutely. So this spread right here, so you're buying one and selling another one, costs you about $1.50, $1.55. If it goes above that 35 mark, it will be worth $3. So essentially, you can do a double. Right. The most you can lose is the amount you paid for the spread, which is the $1.50, $1.55. Right. So you know, it's make $1.50, lose $1.50, but essentially you feel like you're long the stock. 32.35 debit call spread. Yes.
For Citi.
For May. Yes.
May. Harry Reasoner, former ABC newscaster, and Charles Schwab, separated at birth. But there could be a good reasoner to be bearish on Schwab. And what's that?
Yeah, so the options market is showing some interesting signals here. So in late March, early April, there was some accumulation of puts. Puts give you the right to sell the stock, right? So there's some accumulation. That's right, bearish. It's a very bearish position. And actually, this is a bearish risk graph. And essentially, we've seen some of that money come in and selling a lot of the options at the 13 level, meaning that will profit if the stock moves below 13. We don't like to take that kind of a speculative nature position. We like to use in the money puts, and it uses a very small amount of time value.
So this is an April $12 call?
It's the $15 strike price put. It's the April 12s for 2012. Cost you $1.10. It's in the money already about $1. So essentially you're paying 10 cents in time value and on the way down.
Tech. Apple, my gosh, this thing is just going crazy. A few points of slippage in the past few days. Apple hitting almost 600 bucks again. It was up to about 640. You're thinking a little bit of but you want some upside in Apple because it's always been going up.
Yeah. I mean, a lot of people are always looking to take advantage of a quick pullback in Apple to accumulate some more stock. But the problem is it's a $600 stock. Right? Not everybody's got 60 grand sitting around to buy 100 shares. So we use options to create a synthetic position in Apple. Again, we use a bull call spread where we're buying the 550, selling the 650 to help fund fund it. Essentially, for a small amount of break-even price, I think we had a break-even of only moving up $3 or $4. For about $5,000, you can get into the exposure as if you owned Apple.
100 shares,
100 shares.
$60,000. So
that's right.
Cheaper way to play Apple. This is the. You would sell the, what, 650?
Right, we would sell the 650, buy the 550, and we gave ourselves out till June, right? Let's give ourselves a little more time. Let's not look for the immediate pullback. We don't have earnings for another week and a half.
Texas Instruments comes out on the 23rd of April. EPS estimates have been going down steadily from a month ago, 40 cents to 29 cents now. TI, maybe could be in a trading range. You think worse? You think bearish?
Yeah, the options market is telling us that there's going to be some pressure on the downside, right? So we've seen a lot of, again, speculative puts. Something like 11,000 puts are being accumulated at a much lower strike price than where it is today. It's at the 31 level. Once again, we don't like the speculative nature. We like the protective nature. We use in the money puts. Here we say buy the April 34s. The trade's only going to last for a week, right? The options expire in a week, but let's face it, all the juice
will be out of it. It's a firecracker with
Monday.
a short fuse, but you could get it to blow up in your favor. Buy the April 34 put on TXN.
That's right.
Before we go, just wanted to remind you all these problems in Europe, right? All these countries that don't pay their bills, but and they're not really united. Thank goodness we live in a country where 147 years ago, General Lee surrendered to General Grant at Appomattox Courthouse. Of course, President Lincoln was assassinated a week after. A lot of drama, but it built a better country, and be thankful we live here.